Been thinking about coming back to Spotify Premium? Now,
I believe we are all ready to start. Many familiar names today. I see some of our alumni from previous Smartport Challenge runs, and definitely a lot of those who are from this year's run as well, the finalists. All right, I think we are ready and let's just begin, all right? Well, good afternoon, everyone. Welcome to our Ask Me Anything session. Joining me today are three experienced veterans in maritime innovation investments, and I promised we'll be answering your burning questions, which you have been dropping in the pigeonhole over the past week. But if you have more questions for us, you can also drop them using the Q&A function, which is just below your screen, all right? So, and then I'll invite our speakers here today to answer your questions. We'll try our best to get through all the questions, all right? Now, allow me to introduce the speakers we have today. First up, we have Chye, who is the founder of ShipsFocus. Yeah, a maritime dedicated venture studio. He's also a venture partner at Quest Ventures, a leading venture fund headquartered in Singapore. And Chye's interest is in inclusive growth, getting maritime commerce ride the digital wave, which is exactly what we want to see here, as well as helping maritime SMEs close the digital divide. And next up, we have Benjamin, who is a portfolio manager at Group's Singapore office, where he is responsible for the group's investment portfolio, which includes investments in the public markets, funds, and direct investments. Now, before moving back to Singapore, Ben was an investment director at the group's Hong Kong office. And prior to joining the group, Ben was another family office and held several roles at JP Morgan in Hong Kong, and he holds a bachelor degree in economics from the National University of Singapore. And lastly, we have Tarun, who has a long history as well with the industry. He's a marine engineer, having started his career in new construction of ships in the South Korean yards, eventually working in the regional business development functions at companies like DMVGL and Jardine Shipping. Now, currently, he is with Rainmaking. He is the director for the open innovation platform around decarbonization and supply chain resilience, and looking to accelerate adoption of new tech solutions within this space. And he's also a graduate of INSEAD France and SP Jain India. Before we move on to the questions, I know that Tarun is very eager to share with us more about Rainmaking. Yeah, so the stage is yours, Tarun.
Thanks. Thank you so much for that introduction, and I'm glad to be in this esteemed panel and look forward to interacting with everybody. But before that, let me just quickly share what we at Rainmaking do, just to provide some context. Let me know, Ning, if you can see my screen.
Yes, we can.
Great. So Rainmaking, for those of you who don't know, we've been a venture building firm. We work across top of the 100 Fortune 500 companies. We've created over $500 billion worth of portfolio value for a lot of the founding companies that we've been associated with. We are essentially a network of entrepreneurs, product experts, designers, and industry veterans. Specifically, our brand was out there through Startup Bootcamp, one of the most well-renowned accelerator programs around the world. In Singapore, from a trade transport perspective, as Rainmaking, apart from doing the traditional venture building, we are also running an open innovation platform where we syndicate solution with some of the largest shipping companies, chartering houses, to try and solve some of the biggest problems like decarbonization, supply chain resilience. Why do we do that? Our firm belief is, startups are one part of the puzzle, right? Essentially, to find solutions to some of the biggest problems in the world today, you need to have three essential ingredients, right? So of course, you need to have the discipline of a venture studio. You need to have great founder talent, but also you need to be able to use the deep corporate access and capital. And we at Rainmaking are able to orchestrate that, and we sort of work at the sweet spot, or the trisection, as I like to call it, to try and really scale solutions, thereby also providing the founders the access that they need in terms of industry adoption of solutions. What are we here to do, right? In a trade, transport, or maritime industry, we are here to solve some of the biggest problems, right? So today, as the industry is looking to find solutions around decarbonization, we are not just here to meet solutions that only have a compliance angle to it. We really want to move the needle from a global perspective, where at the end of the road, the whole industry, the entire value chain is left beneficial, right? So ultimately, society as a stakeholder can see the positive benefits of adopting new solutions that are coming on the horizon. Very quickly, we have a very disciplined process around it. So just to give you in context from an open innovation platform that we run, just on decarb as an opportunity space, we're now in the second run of the program. So far, despite COVID, we've been able to identify over 2,000 startups in various fields. We like to call it Compass. It's not a, perhaps a nautical influence coming out there. Specifically, we are able to, using Compass, see some of the pockets where there's a massive density of tech startups coming in, right? So areas like trade facilitation, fleet optimization in the last 3, 4, 5 years, we've seen globally a lot of startup activity. However, in certain areas like carbon capture storage, CO2 capture at point, you don't see the same startup activity. That tells you, what are some of the pain points of startup activity not being able to enter certain spaces or being able to enter and crowd a certain space. So from an approach perspective, that's what we use as Rainmaking, which then helps us also in our venture building offering, where we collaborate with industry partners and including the IHLs, not just in Singapore, but worldwide, to really try and find solution. So this was just to give you a context. Really looking forward to the panel discussion here.
Thank you, Tarun. Now let's just jump straight into our first questions. This is the very first one that came in through the pigeonhole that we collected, over the past week. Now, what are the hottest technologies? I mean, since Tarun mentioned decarbonization, right? What are the hottest technologies that you are currently looking at as an investor or corporate VC in the maritime industry? And maybe we begin with Chye, if you could help enlighten our attendees.
Hottest technologies. Hottest by sheer fashion or most popular is talked about is AI and blockchain. But as far as we are concerned in ShipsFocus, the hottest technologies are the technologies that are able to solve real problems in maritime, and that has good potential, or if not already been able to scale. The ability to acquire customers quickly. So those are the hottest technologies as far as I'm concerned.
Tarun, would you like to share a little bit more? What are some of the ones that you're looking at? I know you mentioned a lot about decarbonization, but is there any other segments that you're looking at?
Absolutely. I think, as Chye alluded to, right, there was quite a bit of buzz around whole digitalization or blockchain, but firmly as Rainmaking, we are here to solve problems, right? So few of the interesting trends that we are looking at is AI is quite a broad context, but we're also very interested in connectivity, right? So if you think about a lot of the AI solutions that get deployed on vessel, the Achilles heel is ship-to-shore connectivity, for example, right? We are increasingly seeing quite a bit of activity in nanosats and CubeSats as well, right? So what it does is not only solves the problem around connectivity, but it also enables the industry to provide provenance. So can we look at solutions from nanosats perspective to track CO2 footprint, for example, right? So we're always looking at, the cutting edge horizon, or horizon 3, as we like to call it, from some of the emerging tech perspective. So it's not really just focusing where the decibel of the industry is going, right? It's really looking at for solutions which really move the needle.
Benjamin, what about you? Sorry, Ben, you're muted.
Sorry about that. Yeah, so if I share a little bit of how our group is set up, and then I can share about how we approach on investing or looking at new technologies. So we are first and foremost a operating company and a builder of businesses. So throughout our long history, you can see that we have a whole list of companies ranging from things like Shangri-La or All Green that owns Great World City, or even cinemas like Golden Screens in Malaysia. And we also have a list of some of them we have brought them public. Some like Wilmar, Carry Properties, Carry Logistics, PPB. All these are several $billion listed companies, and Maritime is also a very significant portion of our business holdings. We have PCL, Porsche, and PAX shipyard. So we do the whole line from transport to shipbuilding to offshore services. So we approach let's say sectors in which, as what Tarun mentioned, solve the biggest problems and challenges in the world today. So things like decarbonization, renewable energy, all these are very big sectors. And our view on this is we look to back the future business builders of large businesses in the world. So although we have a specific focus, we tend to follow entrepreneurs and their teams rather than pigeon ourselves into a specific sector or specific product, because we believe that great entrepreneurs will build great businesses and evolve, because what could be hot today might not be hot anymore in the future, and you really need to support the entrepreneurs in their journey.
So what I'm getting is that, sometimes it's not really running after the trends or technologies that are like big buzzwords today, but rightfully, like what Benjamin and Chye mentioned as well, it's really looking at whether or not it's a technology or a solution that truly solves the problem, and that's the key, right? And of course, it has to be aligned to whatever the aspirations, objectives of the organizations that we represent. So I think that's the key. Now, the follow-on question is somewhat related, right? So when you identify a startup to invest in, let's say, so how do you work with these companies, once you put monies in them? So maybe we can begin with Chye.
In our case, as a venture studio, we actually put in quite a bit of our time and effort in helping the startup, whether it's develop their product or finding a business model or going to the market, getting a product market fit, plus developing a pricing strategy, scaling the area and strategy, and so on. There's quite a bit of that kind of work that is involved. So unlike the pure VC or financial investor, we actually combine our investment with very direct involvement in getting the startups or the founders involved with the marketplace. The process, I think, depends on which stage the startup is at. It can start with just getting a problem solution fit. Many times we realize that some founders have not even gotten the very basic solution to the problem because they have not defined the problem properly. So, and that's how we would start with that kind of a problem.
Well, that's certainly it. Another follow-on question, I guess, to that is really then in your case, right? Do you have a personal preference, like you prefer one that is, very early, or is there a specific maturity that you're looking at? Just asking on behalf of the rest that are listening in.
For me? Or?
Yeah.
We don't have a preference, but I think at this moment we are away from the really early stage, meaning that you only have an idea or a concept. Not that we would exclude, but if you seriously have you believe in a very bright idea. There are many people who have many bright ideas, but getting the bright ideas to fruition is a huge task, and that's what a founder is supposed to do, and not necessarily coming up with the bright ideas will you have already achieved. That is far from it. So most of the I would say we would focus on past the angel stage. We are not looking at the investing $50,000 ticket size. We are more beyond that level. So you should have already a problem that you want to solve at the very least.
All right. What about Benjamin?
In terms of the later stage, I think, unfortunately, at this point, we haven't found a maritime startups that actually has proven that it has been able to scale in a big way. So like going into beyond Series A level,
at least not within the region.
No, yeah.
Okay. What about Benjamin? So how would your company work with startups that you identified as potential investors, or rather the ones that you've already invested in?
So generally, because we put a lot of trust into the entrepreneur and his team, and because our group is also very large, so the amount of resources that is available to tap is very huge all around the world. How we tend to approach things is that we would actually look for the entrepreneur to approach us to have a problem or something which they need to solve. Like example, it could be something is we want to go into Cambodia and we don't really know how the legal setup or something like that. We need some help. And then we can obviously mobilize our contacts in that specific area. So how we actually engage our so-called our portfolio companies is actually a little bit of a reverse approach. They have to approach us with a specific roadblock which they need help in, and then we can provide either advice or network on how they could potentially tackle it. So we do actually a little bit of reverse. Instead of asking them, we actually hope that the initiative to approach us and tell us specific problems in which they are facing prevents them from achieving their goals, and a specific ask on how or what would they like us to do to help them along the way.
Right. Okay. Thank you. I think this is really unique group because we are very focused on a certain theme here in maritime, and because of your experience and wealth of experiences in the industry, it's really added bonus to your investee because you are able to provide not just the advice but then the necessary network and context. And that's really important, right? But I think maybe Tarun would be able to share a little bit of different perspective because Rainmaking setup might be slightly different. So if you could share how you work with companies that you invest in.
Yeah, so thanks for that, Ling, again. So I think first and foremost, so Rainmaking is quite unique in the context that we are not just active in the maritime or trade industry, right? So we have the benefit of running venture studios, or rather a network of venture studios in places like London and Copenhagen and around the world, right? And we're serving out of these venture studios other industries as well. So why is this important from a Singapore or a maritime context? What happens is some of the problems that today the startup community is trying to solve in the maritime context, the answer lies in learning the lessons that other industries have solved, right? So if you're talking about value chain problems like port orchestration or orchestration of operations in a port, airline industry has actually solved it to a larger extent compared to the shipping industry. So as a venture studio, what Rainmaking brings to the table is, of course, the traditional toolkits that we have as venture builders, i.e. helping the founder really define the problem, the carving out the product market fit. But what we also bring to the table is our ability to orchestrate and syndicate between our own corporate partners as well, right? So across the value chain. Let me give you an example here. So if we were looking at a particular solution for port orchestration, with our ability of running the open innovation platform, we will be able to take that particular founder or that particular startup to market in terms of dealing with the ship owner, in terms of dealing with the shipping agency houses, in terms of dealing with large chartering houses, right? So really empowering the founder to scale their particular solution. The second approach we do is we really have a very high standard of both the founder talent in terms of the level of talent that we bring into our venture studio perspective, and of course the solution vetting that we go through, right? So as I shared earlier, because we run the open innovation platform, we are able to see on one hand, the industry pain points, on the other hand, the knowledge and the cluster of startup solutions that are coming in. But we also then study why the startups are not able to scale. So we have a view on what are some of the pain points on the emerging solutions. So a mix of these approaches allow us to really empower the founders that come into our fold.
That's truly unique. Thanks, Tarun. Now, the next question. Now, the questions I asked, right, are not really in any particular order, just that because people put questions into the chat group all the time. So this question is somewhat unique to PIER71. The question, it goes this way: if we have a deployed solution in other industries and only need some tweaking for the maritime industry, would you view it more favorably than a startup without an MPV? Why is it is unique? Because for PIER71, when we call for startups to participate in the challenge, right, we ask for the entrepreneurs to reimagine their solution for the maritime industry. So they may already be operating really well, very established customer base in other industries, but then sometimes they find new opportunities in the maritime industry. It doesn't mean that whatever works well in the other industry may not work for maritime. So I guess that's why this question came up. So let's just go back to Chye if you have responses for someone who asked this question.
Okay. I think there's no preference whether you're from outside of the industry or inside the industry. But I would like to highlight on the point about MVP, minimum viable product. This concept works very well particularly for B2C business. But in the case of B2B, and especially software, not hardware, I would say 99% of the time, MVP will not work. You can't go to a corporate and say that, I have an MVP. If you don't have a real solution that proves that it will work, most of the time the corporate will not, the customers will not respond unless you are actually co-developing an MVP with the customer. And that is a different matter. So this is one part of the answer. Another part is, so if you have a really good solution that you want to bring to the maritime, then I advise you to really find somebody who understands the business very well and find the angle of application that can allow the solution to be merged into the workflow, and that you are able to from then scale and make sense of the product.
Right. Okay. So then I guess if it's a mentor who is already in the industry, if you have someone like that, that will be very, very valuable to have on your team to convince the investors as well. Tarun?
Yeah, if I can quickly chime in, I sort of agree with what Chepo mentioned, right? The B2C industry and B2B, and especially the maritime industry, is very different. There are some structural challenges in our industry which are quite unique. But at the same time, a slightly philosophical undertone here, right? The industry itself, our industry of shipping, is learning what are some of the new horizons of technology and what some of the old ways of doing things are getting disrupted, right? So even though from a truest sense, an MVP might not be attractive to a large company, but we are seeing an increasing appetite by large corporates to even engage and understand what some of the emerging new business models are of these, even an MVP-like solution, right? So whether it's freight rate forecasting and what have you, right? There are quite a few emerging spaces in that area, right? So I will not sort of discount any startup just because they've just had like an architecture of or just a wireframe of a solution, right? So it really has to be seen at the merit of the solution, or what problem are they solving.
How about Benjamin? Do you think it's an added advantage if a particular startup or entrepreneur has prior experience in other industries and coming into another new industry?
I think prior experience and all of this does add some value, but the main part is about communicating how his prior experience or what work and research he has done, how is it applicable to the problem he's trying to solve and the business he's trying to build. Because communication is a very critical part at the early stage of the startup, because you need to get buy-in from either your clients or investors, and probably both, in order to get a business off the ground. So the communication element actually is very, very important. Whether you leverage your past experience or minimum viable product or anything of all these lines, these are just the tools in which for ourselves as investors, we evaluate. The key part is how you piece them together, how you communicate the value, and how you want to bring your company to this journey. That is much more critical. However you use, whether it's your own network, your own product, minimum viable product, or your experience, all these are just things you can use. Yeah.
Right, that's interesting. Communication is key. Okay. Well, we have new questions come in from audience live. We have one from Chris, who's actually a mentor at PIER71. So I think he's probably asking on behalf of his team. Knowing that the maritime industry is conservative by nature, is alignment of investor expectations an issue? Meaning that VCs typically hope for an exit in 3 to 5 years, but it may take longer than that for maritime startups to achieve an exit. Maybe Chye, if you want to take that one.
Thank you, Chris, for the question. It's a good question. I will answer it in two parts. One is, I think there was an alignment issue in the past. So there was maybe over expectations from the investors that are not, familiar with the maritime industry. And that is also why Seeds Capital came and awarded 3 of the panelists today, the co-investment partnership. So we are supposed to understand and be more aligned with the expectations on the startup. So that is the first part of the answer. Let me see. Then, in terms of expecting returns, actually, the key for the startups is actually achieving traction and the prospect for growth, further growth in traction. And when we talk about exit, say within 3 or 5 years or 7 or 10 years, you don't have to exit at the end. For example, IPO. You can, investor can also look at exiting as long as he came in at a low level and there's a sufficient return for him, and the investor is willing to or happy to exit. But so the key point is for the startup to show traction, continued traction, and the potential growth of further traction.
This is Ben here. I'd like to add something here about the 3 to 5 year exit. So for us as a quote group, unlike funds, some funds are required to exit because they have a fund life. It can be 7 years, 10 years with extension, all of this. For us, we're actually more like a holding company and corporate. So we are actually happy to hold on to our stakes forever. And you can see that the companies that we built or we support, I think the more recent ones would probably be something like SEA, which is the operator of Shopee. We have backed them on the private stage. When the IPO, we add all. Every time they raise money, we add again. We are happy to own companies forever. And it's because our unique nature as probably more as a corporate rather than a fund with a typical fund life.
I can quickly chime in here, right? More so on the context of aligned incentives, or whether the industry is very conservative. I often get asked, shipping is a very conservative industry, but I somehow challenge that notion, right? Because as traditional asset owners, the ship owning community has, they ride the cycles in the industry, right? So we've all seen speculative new build orders in different parts of the world where there were no charter contracts, but vessels were getting ordered, right? So there was a risk appetite. The other thing to sort of keep in mind is there have been earlier attempts in the maritime industry to have venture capital come in with limited success. But I think this time around, there's a much bigger drive, there's much bigger awareness, and you see that from support from the government entities as well. If you just look at the Singapore cluster, so Seeds Capital definitely for one. All these things actually add to the investor awareness as well, right? Number one. Number two, I think what has happened is increasingly these startups, even though I agree there have not been any major investments beyond Series A, but in a certain segment, if you look at trade facilitation, you had some massive valuation for certain startups, right? So that has really sort of catapulted the startup community in the shipping industry and how it works for investors to have a little more patient appetite, number two, right? So I think it's an interesting time for founders to really pick up some of the really hard problems of the industry and take a stab at it, right? Because in my 14, 15 years in the industry or so, this is probably the first time where age-old industry players are also willing to engage with the startup community to try and find those solutions.
Okay, thank you. We still have a few more questions to get through, so I'm going to have to ask this real quick. So I think Derek and John are asking very similar questions. John, I believe they are both from representing the startups. So typically, which stage of the startup is most favorable for early investments on Series A? And what's the typical ticket size for the maritime industry? I'm not sure whether you can lump it for the whole maritime industry. It's probably very unique, ticket size very unique to each investor. And so maybe we can start off with Chye.
I also like to respond a bit. I think defining maritime industry as conservative is only half of the story told. The other half is it is highly advanced and highly innovative, continually reinventing itself. In the past 30 plus years, my experience is, the industry continually reinvent itself. So what we generally find when startups founders tell me that the industry is very stubborn or very conservative, very stupid, even, I would say that they are very smart. The maritime industry will not put their money into something that they are not sure of return. And I think this is also important for startup founders to understand. If you have a compelling, attractiveness for the investors to part with his money, then that's fine. But if you don't, then you can't blame the investors or the industry. So this is something I would like to highlight. As a founder, we have to keep looking at ourselves and, what have I not done more to, attract an investor. And in terms of which stage of the startup is the most attractive, I would say that, the key is not which stage. The key is the price that I'm getting in and the prospect of my return. So remember this point, as an investor, always is, I want to buy low, sell high. Do I have the opportunity to buy low and the opportunity to sell high? So this is the basic thing for me to consider.
Yeah. And I also agree that, I think the industry is really adopting solutions. They are moving. And that's precisely why people are beginning to see opportunities in this industry, right? So yeah, it's like new blue oceans. Is there anyone else who would like to answer this question? Otherwise, we can move on to the next one. Okay, John is asking what is the typical check size, ticket size? Is it something that we're able to disclose? And if it's a common practice of raising funds by giving away equity in exchange for money, or by using convertible notes, if you have any preference at all. Maybe we'll begin with Tarun.
No, I think, look, again, I'll answer this from a industry context perspective, right? So of course, we as Rainmaking take a portfolio approach, right? A mix of very early stage solutions to slightly more mature solutions, and solutions that come out of our own venture studios, right? But I think it is quite early to sort of standardize an average ticket size across the industry, simply because we don't have those data points coming through, right? So we are sort of evolving at that space. However, what we are really looking for is, if not the traction for early, if you're an early stage startup or a founder, you would not have had a long traction to demonstrate, but show us the potential that you have in terms of what you have heard in the market. What are some of those demonstrable conversations you've had, right? And that is when it really gets interesting for us. And then we want to work hand in hand with the founder community.
Okay, so Manik from Vulcan AI, one of the finalists this year actually, asked, what are the common characteristics of a successful startup and its founder that you've seen across your career? Maybe let's begin with Benjamin.
I think common characteristics is, especially for a founder, is the ability to attract the right people, know what are his weaknesses, okay, and the ability to attract and build the right team in order to so-called cover the weaknesses that is inherently in has, and the ability to be quite how to say to always reflect on the problems that he faces, like what Chye mentioned. You keep trying, and there's no traction from the clients or from investors. Why? And how to solve that problem, and what you can do to beef up your team or yourself. The no becomes a yes. The ability to think very critically is also another factor. So I think these two are probably one of the common things which I see, and they are usually the drive, the amount of drive they have is also a little bit higher than the ordinary person. Yeah.
So it's people factor. What about Chye?
There are many types of startups, and there are also many types of startup founders. So there's no singular definition or the way to describe, but there are some consistency. I agree, and startup founders tend to be able to seize an opportunity. He is able to see a market gap that is worthy of solving. Startup founders have ambitions. Startup founders are driven and self-motivated. Startup founders are both made and also you're born to be a startup founders, but you are also able to be made to be a startup founders, in my opinion. So if you are not so talented, people don't always say that, hey, you're born to be an entrepreneur. Don't worry, because just the time hasn't come and you haven't found the fit. And sometimes the situations, the environments, the need, the necessity actually can produce a startup founder. So actually, I have not been able to very clearly classify somebody and say, okay, this is a typical startup founder. There are many, many versions of it.
Sometimes it's really gut feel and your intuition as well, right? When you meet the team and the founders. But I know it's important for founders to be driven and ambitious, but I think I want to highlight this, what Benjamin said. It's really being critical of your team's weaknesses and you're able to fill in the gaps. But so a founder sometimes need to know when to step down as well. If the company has already reached a certain stage and it's not within your ability to bring them further, you need to bring other people in. You must also be able to to take another role. Maybe you're no longer the leader, so you need to find people to replace you to bring it to another height. So
also, that depends on how do you define success, right? So successful startup founder is defined by yourself or by others? So if it is defined by yourself and you're happy with it, that's fine.
That's getting a little bit philosophical, but sometimes it is. How about you, Tarun?
Yeah, so all good points, but there's no silver bullet when thinking about what is a perfect recipe from a founder talent perspective, right? However, we are also very conscious at Rainmaking when we talk to founders that we want to really understand what their purpose is, right? Are they really motivated to go into building a solution? Whether, let's take a life case, decarbonization, right? So decarbonization is not an isolated industry problem. It is a problem that is being faced by the entire human race today, right? So the purpose is very important, right? So that in effect actually distills down to ultimately the drive and what have you, right? The hygiene factors. The other thing that we are really keen is the complementary skill set of the team, right? Because ultimately great companies are not built by one person, right? So you need to have that complementary skill sets. So as much as I sort of agree with you that there is a factor of gut, but I think there are means and ways to start quantifying some of these things and really understanding and removing that sort of subjectivity out of the decision making. And that is what I had earlier alluded to, that at Rainmaking we have tools and methodologies to really sort of sieve through these talents, right? So that we really want to back those individuals and companies that can really move the needle to some of the toughest problems.
Okay, I'm going to take next question from KH. This is actually one of our 2018 cohorts founder, from the finalist. So here goes. We often hear comments like, "We are interested when you have higher, better traction than we talk." Now, for B2C, traction is usually measured in terms of number of users, which can even be free users. While with B2B solutions to corporate, typically having longer selling cycle than B2C user acquisition cycle, how would investors measure traction for a B2B solution? Instead of using user acquisition, user number, user base as a parameter. So maybe we begin with Benjamin.
So the way I look at this, if I were founder and somebody told me this, I believe that their concern, it's probably along they have concerns on your product, whether is it really that good or viable, or second, they have concerns whether your team can actually execute the product. So it's not about traction or not question or don't have traction. The question is, their concern is mainly on either the idea itself or your ability to execute. So I would try to solve the investors or clients' questions through other means, either beefing up your team or trying to delve more deeply into what is the reason that he gave this kind of feedback.
Chye.
Being somebody from the industry and as an investor, I would completely understand the kind of traction that you achieve is different from a B2C kind of traction. So I don't have that kind of expectation for maritime startup to achieve 100 customers in half a year or 1,000 customers. And a few customers are good enough to prove a certain traction, and a further few that are willing to part with their money is a proof of value. So now the question is, what is the prospect of being able to gain more traction? How good is the network effect that you can create as a founder? How do you have a pricing strategy that is, right? Do you have a right strategy to go, whether you go deep before you go broad, or that kind of thing? I think being familiar with the maritime industry, I think the startups and the founders don't have to worry today that you are being misunderstood.
Tarun?
Yeah, if I can quickly chime in here, right? So fully agree there that as investors, we're not looking, rather at Rainmaking, we're not looking at just pure numbers, right? That how many users have adopted your solution. Those metrics don't work. a very specific example. Let's take a case of a startup which is deploying fleet optimization or route optimization solution, right? So you don't have to show me that your solution was successful across 500 ships of different types around the world. We have enough access to the industry, our own sort of domain expertise to really validate. But what we are really interested in is to see the impact that your solution has actually done, right? So is your algorithm actually delivering what you claim, right? And that is very easy for us to sort of validate with our own network of experts that we also have, right?
Yeah, I think that's the uniqueness about having investors that have true knowledge of the industry itself. So you know what metrics and what parameters to look out for. So that's gonna be easier on the founders and the team that's looking for investments. Now, another question that's listed is related to COVID-19. I think because that's the elephant in the room. We can't help but address it. So what are you specifically looking for when you're investing in companies during this COVID-19 period, or rather season? Maybe let's begin with Chye. Would it be any different?
I guess if you have a solution that is riding or taking advantage of the COVID-19 situation, for example, the need to go online, then yes. But I don't know, how sustainable it is. You cannot guarantee these conditions will continue. But yeah, while it lasts, and if you are able to have a solution that gains a lot of traction during this COVID-19, that means you're able to take full advantage of it, of the conditions, then yeah, why not?
So if I can sort of just add their name from our perspective, I think COVID-19, what it has done is, yes, it's a massive challenge around the world, right? But it's really brought forward some of the fault lines in the global economic system, right? So case in point is disruption, right? Supply chains around the world were disrupted. Whether at ports, seafarers were not being able to, crew change didn't happen and what have you, right? So at Rainmaking, what we're really looking at is those solutions, because let's all pray and hope that COVID-19 is behind us. We will not, as world, go back to the old ways of doing business. So what can we really look at, really enhancing the sort of resilience of our supply chains, right? So that's one area that we're really doubling down. So simple example can be supply chain visibility, right? So today, supply chain visibility end-to-end has been a massive pain point. And in that particular area, across industries, we've seen a lot of activity by the startup community, right? So we are now looking at it. There have been few movements into the maritime space as well. What are some of those solutions which will then allow the world that, God forbid, if we have to face another such situation, we are better off and better prepared. So that's an angle that we're really pursuing at the moment.
I think I am also asking this question. It's kind of like, now with COVID-19 has been in the picture, right? Has that kind of like affected your way of assessing a particular deal flow that comes on your table? Because, before COVID-19, maybe you only look at items 1 to 10, if they check this, check that. But with COVID-19, has it kind of like brought about a new perspective to the investors and say, hey, you know what, maybe, business continuity or whatever it is also another critical aspects that, we look at for future assessments and whatnot. I think that's also what I'm asking about. Benjamin, do you have anything to add on?
So I think the fundamental approach to how we approach an investment is still the same. Backing strong teams and strong founders that target a problem that has a large addressable market. The fundamental approach is still the same. Now with COVID-19, of course, there are more data points because we can see how the founder and the team react to changing businesses, changing business environments, changing operating environment. So there are more data points that we can so-called analyze to determine the strength of the business. So that's how COVID-19 probably affects our so-called research and due diligence. And also in terms of the investment that we deployed, because now it's just a higher risk in environment, there are more uncertainty. So generally, we are also a bit more so-called in terms of the risk reward. We would require a higher risk reward in order to pull the trigger, because for us, we are a little bit fortunate that there can be we can invest both in private publics and our own companies. So generally, because there are also attractive opportunities in other sectors, the risk reward profile has to be higher in order. The reward to risk has to be better in order for us to pull a trigger. So that's how things have changed for us.
All right. I have one question. If you have to name one reason to not invest, right, like a deal breaker, what would that be for you, Chye?
One reason, yeah, actually it can be many, many reasons. One reason is I don't have the right chemistry with the founder. I think the founder has not only got the ability, the founder also must have the attitude. He must be able to be humble enough to learn and self-reflect. So he must have high trainability, in my opinion. Particularly, we are going to help the founder to solve certain problems that he cannot solve by himself. So if he don't have that, then it's a no-go for me.
Tarun?
Wow, like Chye mentioned, right? Not one reason. There's so many. but I sort of agree what he mentioned. The only thing I would sort of rephrase it and say is that self-awareness in the founder team, right? And willingness to learn, because what happens in my own life, once you have a solution hypothesis around a particular problem, you almost get married to it, right? And then you believe and you really double down onto that rabbit hole, right? So the ability to sort of quickly iterate and learn, I think that's really important for us.
And Benjamin?
I think one of the things that immediately, if we see we are unlikely to progress further, is if the problem they are trying to solve has too small addressable market. Like if the problem, the market size is only $10 million, I mean, that's it, right? So if you target a too small a problem with a very limited addressable market, it makes it very difficult for us, because even if you win, so what?
Yeah. Okay, we have time for one last question. It's a short one. Are you mostly strategic or financial investors? Let's start with Tarun this time.
Definitely strategic. And simple reason is we are here to solve, and I keep repeating it, some of the biggest pain points, right, that we're facing, right, whether it's in shipping or other industries. So for me, it doesn't make sense to just look for a financial return. However, the star mark is that we definitely are looking for that ROI, because our belief is ultimately the business, it has to make business sense. If you want to solve some of the biggest problems, the solution has to make business sense. Only then you can have that impact that we're trying to solve.
That sounds like the most politically correct answer. I guess that rings true for Chye and Benjamin as well.
I think a dollar coming from us is a few more times a dollar from any other VC, because of our sheer help that is going to come to help the startups. And that is what the ShipsFocus Venture Studio is about, helping startups move from 0 to 1, also helping corporates doing the same.
Okay.
I think it's quite difficult to say whether it's financial or strategic, because in the end, all of us run businesses, either funds or companies. So the key of a business is to have a sustainable, profitable business. So that's always the key objective. Financial is always important. The strategic part comes from more of our approach is much longer term, because we look to build a business ideally that will last forever. So that's our approach. So everything that we do, we are not looking to make a quick buck, but we are looking to build a large sustainable business that hopefully we can hold forever. So that's our approach. Whether you classify that as a financial or strategic, I mean, we don't really classify that much internally in terms of the way we look and the way we evaluate.
All right, thank you so much. Now that we've come to an end, I only have 2 minutes left to wrap up right before we end this. So I would like to express my extreme gratitude to our speakers here today for taking time to address some of the questions that came from our PIER71 community. So big thank you. And before we end, I think from this discussion, there are a few things I picked up. First of all, it's really important. Our investors here today are looking at a couple of key pointers, right? First one is, are you solving a real problem using a real solution? And if you're solving that problem, is that market big enough to enter? So that's one. And secondly, what they're looking for are teams or teams that are all-rounded, that have all the necessary competencies, but most importantly, they're also looking for a leader that is, I guess, ambitious. I think another keyword that keeps on coming up is someone who is critical of himself or herself. Self-awareness is important. Knowing what drives you, what's needed for a team, what's best for the company is important. And lastly, what's unique about this group and this panel is that they all have experience in the industry, be it in whatever segments they're in. So that helps because they truly understand the business that you're in. And so with that, they're able to better advise, they're able to better assess. They won't be giving you probably metrics that don't make sense for the businesses that you're in. So that's the uniqueness about this group of panel here today. And I hope I summarized it correctly, because these are the pointers that I picked up throughout the discussion today. So once again, thank you very much for spending time with us. And if you have more questions, you can email it to me and I'll try to get answers for you. I'm sorry we can't answer all the questions, but these are some that we could within a short span of time. So once again, thank you. You can come back and join us next week. We will be sharing more about how you are able to push innovation frontiers through technology. So if you're interested in university technologies and IPs that come out of NUS, be sure to join us next Monday. So there are plenty. NUS has a reservoir of IPs and technologies that you can take out, you can license, you can spin off. So if you want to know what those are and where to look for them and how to get about doing it, do join us on next Monday, 5 to 6 p.m. We're going to show you where and what, and we will also have professors to tell you more about their work that can be adopted in your own business, be it a startup or corporate. The list is endless. All right, so once again, thank you. Join us on our LinkedIn page to get the latest news as well, so that you don't miss sessions like this anymore. All right, thank you. Bye.
Thank you all. Bye.
Thank you. Bye-bye.
Bye.